Good morning, welcome to the Australian Early Finance Briefing for Tuesday the 1st of December. My name's Nick here in Melbourne, starting with the ASX. As we remember 2 weeks ago, there was that frustrating outage where the market was down almost for the whole day due to a tech outage. Now, that was made even worse by the fact that there was a lot of positive news flow in global markets and there was a big rally on the back of vaccine news that if you relied on the ASX, you were essentially not able to trade that. Now, whilst most of the system has come back online, there's still part of the ASX which is down. So it's been down now for 2 weeks, and this system's called the tailor-made combination service, and it essentially allows brokers to enter multiple sort of trades together with a sort of target, difference or credit, depending on what's being traded. It's popular for sort of rolling options, as they expire, or potentially, an option and an equity trade together, those sorts of things. And it's still out, and it is still apparently available if you've got a really big order. So there's a special size threshold with 100 or more contracts, but that's really only large institutional investors. Otherwise, everyone else is still locked out. The ASX has mentioned that the TMC functionality was at the heart of the software issue that caused this November 16th outage, and it would remain closed until a detailed investigation is completed. So basically it sounds like they've traced back the cause, and this was the cause, and they obviously don't seem to know what really made this particular part of it have that happen, but it does mean that it's out until they can find what's going on. But once again, another sort of argument to the case that the Australian Stock Exchange, or Australian Securities Exchange as it's now known, is a monopoly that's essentially abusing its monopoly power by underinvesting in its technology and evidently hiring incompetent management, particularly in terms of its technology, costing Australian investors and those trading using this combination service for an ongoing amount of inconvenience. Moving to the Australia-China trade war. Now, it was announced late last week that they were placing enormous tariffs on Australian wine of between 107% and 212%, and that's on the sort of basis accusation that Australia was dumping wine in their market, and it's on anything under about a 2-litre vessel, which would mean anything sort of premium and in a bottle will be hit by these huge tariffs. Treasury Wine Estate is the ASX listed wine exporter most exposed to this move. They suspended trading on that announcement. They've resumed now, and that has resulted in their stock dropping about 16% since that trading halt. But they've come out announcing that they're looking at really sort of building their business out of China. They were too exposed. About 30% of their business was China, and they're looking at moving outside of this. So the CEO, Mr. Ford, has mentioned that short, medium, and long term, our intention is to very clearly on building our business outside of China over the next period of time. The real exciting growth and future growth will come from the US and from markets in Southeast Asia, such as Malaysia and Thailand. Those markets are all growing significantly from a percentage point of view. But there's a report from Morgan's suggesting that it will take at least 3 years for the companies mitigating strategies to repair earnings, which is obviously being reflected in the share price. That's your early update for the 1st of December. Have a great day.
This podcast is for investment professionals only and should not be relied upon by private investors. The podcast is provided for informational purposes only and does not constitute financial advice. The values of investments can go up or down, so you may get back less than you initially invest.